Hey, this is Wade Conway, VP of Business Development at Lincoln Home Loans, with your Middle Tennessee Mortgage Market Guide report. In review, the Fed met last week, and the housing and manufacturing and labor sectors have been struggling as of late. This week, there are several key reports that are out there to look at. We've got the housing reports coming out, plus some things that focus on the U.S. growth and consumer attitudes. In general, what was going on in the industry since December, the new housing starts have declined. They've been declining since November. They were down 16% in January from December. A lot of that may be related to what's going on in the weather, but I've read some arguments that primarily the new construction is going on in the south and the west, and the weather wasn't really an issue there. So I think there may be something else that's ticking on we haven't really quite hit on yet. Also, the National Association of Realtors, National Association of Home Builders Housing Index came down to 46, and it's the lowest reading since last May. The way that index works is that if it's over 50, then more builders are viewing the outlook of new construction as good versus bad. So at 46, it's leaning toward not quite as good as it has been. And we see in manufacturing, both the Empire State Manufacturing Index and the Philly Fed Index both fell in February to below expectations. So what that really means is the labor market is struggling now, and weekly initial jobless claims came in at 336 and continue to hover around this number, and inflation is considered tame or in check at the moment. What this means for home loan rates, well, remember the Fed has tapered off buying mortgage-backed securities. Usually what happens after they put out their report and they meet is they try to lower short-term interest rates. Of course, they're just virtually zero right now, so what they started doing was buying mortgage-backed securities as a way to help spur the market, and they were buying $85 billion annually, and they've dropped that back to $35 billion annually, and they may really have to be rethinking that. But as long as they are supporting the mortgage industry, it's helping keep interest rates low. But the fact that they've tapered from 85 down to 35 is not really boded all that well on the industry as of late. So, but by and large, interest rates are still really good. We scroll on down here, we're going to see the upticking here is the price of the Fannie Mae 4.0 mortgage bond, and when it goes up in price, it goes down in yield. So we've seen a little bit of a downward movement this last week, but we are still just above the historic lows. So still a good time to refinance or buy a house here in Tennessee. So thanks you for tuning in. It's Wade Conway with Lincoln Home Loans for this week's Mortgage Market Guide.